Howdy, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Monday, September 18th, 2023. Hope everyone had a great weekend. We'll start with today's key macro event, which is central bank bonanza plus the evolving inflation narrative. So this week brings us central bank decisions from the U.S. Fed, China's PBOC, the U.K.'s Bank of England, Switzerland's Swiss National Bank, Sweden's Riksbank, Norway's Norges Bank, and then on Friday we got Japan's BOJ. In our view, the BOJ meeting Friday offers the greatest potential for a hawkish surprise, given where Japan is in its growth and inflation cycles. Per our global liquidity monitor, Japan is the only major economy in the world with an above trend reading in real GDP, composite PMI, headline CPI, and core CPI. Shifting gears, Brent crude oil is now pushing $95 a barrel after a double-digit rally over the past few weeks. We've already seen energy impact CPI and PPI statistics here in the U.S., with U.S. crude production just shy of its all-time high, and the Biden administration having already severely depleted the strategic midterm election reserve to buy votes last year, the risk of an energy crisis is quite high. And then lastly, meanwhile, median inflation expectations declined sharply in Friday's University of Michigan Consumer Sentiment Survey. The one-year reading slowed 40 basis points to 3.1%, which is the lowest level since January of 2021. And the 5 to 10-year reading slowed 30 basis points to 2.7%, which is the lowest level since December 2020. The 30 basis point deceleration in the 5 to 10-year reading was the sharpest month-over-month slide since March of 2009. So that was just a little bit of an excerpt from our leadoff morning note. Obviously, you got to subscribe to get the full, key takeaways, because we'll talk about what's happening in the data front. But what we keep behind our paywalls, what you should actually be doing specifically as relates to your portfolio construction and asset allocation, that information is reserved for our paying subscribers. So transitioning to my Bloomberg terminal this morning, I just wanted to get a little bit of an update here on some of the cross asset performance that we're seeing. We'll start with the equity market performance. These are normalized 1 month percentage changes. So we got the S&P 500, it's kind of middle of the pack at plus 1.4% on a month-over-month basis. Leading to the charge to the upside, you got consumer discretionary at up 5.6%. Leading the charge to the downside, you got consumer staples at minus 2.3%. So that's a pretty clear indication that from a dispersion perspective, the market is not yet reeling and ready to price in. That looks like a sharp slowdown in growth. Transitioning to fixed income here, got the Barclays Ag middle of the pack there at minus 0.2% month over month. To the top side here, we got high yield credit at plus 0.7% month over month. And to the downside here, we got the TLT, the long-term Treasury bond ETF, at minus this is the BWX. This is the international Treasury bond ETF. So that's currency unadjusted, down minus 1.8% month over month. And then shifting to currency markets, we all know that it's been a bull story for the dollar for the past, the dollar's been up for, I want to say 9 consecutive weeks. That was the longest weekly winning streak we've seen in the dollar since go back to 2005. That looks like it's continuing here a little bit this morning. But month over month, it's up 2.3%. The currency with the biggest drawdown month over month is the British pound here at minus 2.8%. Shifting gears to commodities. The DBC, which is the commodity index there, is up 5.7% month over month. Every major commodity as sort of sub-asset class is up month over month. It's being led higher by uranium at plus 23.1%. You also with Dragon has been precious metals up only 1.6%. In terms of this move that we're seeing in commodities. And then lastly, with respect to crypto, we got Bitcoin leading the charge here, plus 4.1% month over month. Whereas Solana, which is having a big move today, but they're still down, dragging and lagging month over month at minus 8.7%. And then we'll wrap it up with my longbow dashboard, just hitting on some of the longbow's trading ranges here in terms of what to do from an actionable tactical standpoint here in markets. So we got an overbought signal here in Bitcoin and longbow here. So that's not necessarily something you should be chasing. And at least from a tactical standpoint, near overbought signal in Ethereum there. And that's pretty much it. So we'll wrap it up there. Darius Dale presenting our macro minute for Monday, September 18th, 2023. Thanks for joining us. We'll catch you back here tomorrow. Everyone have a great week. Cheers.